I am going to run you through a narrative which I believe is one of the most exciting DeFi trends in crypto: liquid staking. I'm a big believer in liquid staking and its benefits, and the growth of Ethereum liquid staking post-Shanghai upgrade has already started to show signs that it could be the next big trend in DeFi, and I want to run you through some of my favorite projects in this space, as well as explain the narrative in general and why it could potentially be a good addition to your DeFi portfolios. If you're excited for the show, smash a like button and make sure you subscribe for future content. And without further ado, let's get into LSDFi. So in front of you, you can see the current lay of the land when it comes to how liquid staking is distributed amongst market participants, with Lido, Coinbase, Binance, Figment, and Kraken, and Rocket Pool having the lion's share of the market share when it comes to liquid staking, but specifically Lido, which holds a 31.8% market share in liquid staking. And you can see since the Shanghai upgrade, just over the past couple of months in particular, the growth of the amount of ETH being staked into liquid staking protocols has significantly accelerated. And you can see on the bar chart here the breakdown of which entities have actually been receiving the most amount of tokens compared to others. Now, if we look at the amount of ETH staked, we can see that it's already above 20 million, and in percentage terms is now above the 16.5% mark, which means 16.5% of all Ethereum now in the market is being staked. This number is only going up day by day by day. Now, compared to other protocols, like for example other chains like Cardano, Solana, etc., that have much higher staking ratios, of even some L1s being 70, 80%, the Ethereum staking ratio is still extremely low. So in terms of just a sector with growth potential behind it, as you can see in front of you, like the top 20 POS chains average 58.1%. Ethereum only has 16.1 at the time of this publication. It's now sitting around 16.5. So there's still massive growth potential in this sector, and obviously one of the ways to capture growth from the Ethereum staking sector as a whole. Obviously, one is just buying the Ethereum asset itself, but liquid staking kicks in as another bet because you are seeing a significant amount of inflows into the liquid staking market as opposed to just staking Ethereum, because liquid staking is your most obviously liquid alternative, but also the most capital efficient alternative, because it allows you to then take your Ethereum that you've actually staked and do other things with it, whether that be stake it in a DeFi pool to earn additional yield, whether that mean put up your Ethereum as collateral to borrow against it to unlock capital for additional capital efficiency. There are many possibilities, and that's why we've seen the growth of a lot of these protocols. You can see Lido, Rocket Pool being super strong growers here in the dark blue and the light blue. We can also observe that the uptick really started accelerating post-Shanghai, because that is when you could officially have redemptions of staked Ethereum from the beacon chain. So all that looks fantastic from a fundamental perspective for ETH staking, but what is LSDFi? Well, LSDFi refers to DeFi protocols that are built on top of liquid staking derivatives, or LSDs. So your liquid staking derivatives are like your staked Ethereum, and you'll have certain protocols like Lido, Rocket Pool, etc., which offer the staking and the issuing of these assets. I want to focus on the LSDFi protocols, so the protocols within this niche that allow LSD holders, so holders of these derivatives, to put their assets to work and maximize yield. As we asserted before, LSDFi protocols have experienced a rapid increase in total value locked over the past few months since ETH Shanghai, benefiting from the adoption of liquid staking, with cumulative TVL in the LSDFi space now crossing the 400 million mark, having doubled since the beginning of June. So there's been huge growth in this sector, which has been boosted by major tailwinds, aka Shanghai, but also development in the liquid staking space, as well as the current low penetration of DeFi, because currently TVL in LSDFi protocols only represent less than 3% of the total addressable market. So look, this is a very small market, and the reason why I'm talking about it is because I'm a big believer in ETH staking long term, and when I just look practically at the landscape of ETH staking, I see liquid staking derivatives finance comprising a significant role in that future. And for that reason, with such a small addressable market actually being targeted at the moment, I do think that there is extreme room for growth here. So if you're not already aware of the narrative, today's the video where you become aware of the narrative and can start really going down the LSDFi rabbit hole like I have over the past few weeks. So let's look at some of the growth, and then let's get into the protocols that are relevant here. By the way, this is the Binance LSD report that I'll be quoting some of this data off. Absolutely fantastic report. I highly recommend reading it, but I have picked the best bits for you here. So they said we've seen a significant growth in LSDs. LSDs are tokens issued by liquid staking platforms, aka Staked ETH, 𝗲𝗓, and 𝗕𝗵𝗂𝗶. There are considerable technical difficulties and heavy capital requirements to run your own node, which may not be suitable for everyone. One of the requirements is actually having 32 ETH. So capital efficiency aside, actually the barrier to entry being less on LSD protocols is probably your number one selling point. For example, if you want to stake your Ethereum, can you afford to have 32 ETH to start up a node? Probably not. The average person is probably going to be, much more prone to putting it in an application like Lybra or Rocket Pool that does not require you to have a minimum. That is a huge benefit to liquid staking protocols. So they basically allow more users, right, to participate in the staking process with lower barriers to entry while retaining the liquidity of staked assets. And we can see here, liquid staking balances have grown alongside the overall staking market. You can see liquid staking balances are actually at their all-time highs right now. So let's look at some of the major tokens in this space, with LSD providers such as Lido, Rocket Pool, Frax, Binance, and Coinbase being some of your main ones. I think it's undoubtable to acknowledge that Lido is pretty much the dominant player here with over a 38% market share. But in terms of pure growth, you've seen Rocket Pool grow really quickly. You've also seen Frax grow really quickly. And Frax is actually one of my favorite DeFi protocols in general from a long-term perspective. So that's just a little nugget of gold there. Definitely research more about Frax. I think lots is coming there, but I've been very impressed by their growth. But obviously, Lido, Rocket Pool, they've also been major beneficiaries. Rocket Pool, in terms of token price, probably has performed better because it has more linear value accrual. Lido, more of a governance token. Rocket Pool, you're actually required to lock up some of those tokens when staking Ethereum. So the value accrual there has been strong. In terms of the lay of the land here, what is the current landscape? Well, you have the liquid staking derivatives themselves. So the platform, the providers are Lido, Stata, Anchor, Rocket Pool, Frax. You have your centralized liquid staking providers, as we touched on before. So your Binance, your Coinbase, Kraken did have a program, but I think they've started to wind that up. LSDFi, you have the CDP stablecoins. So Curve, Raft, Index LSDs, Index and unshETH, yield strategies, Instadapp, Pendle, and Flashstake. We're going to talk about these in a minute. And then your money market. So all of this is the broader LSDFi ecosystem. So just to simplify it so you can understand, your staking derivatives are your platforms that offer the derivatives. Your money markets are the platforms that allow you to take those derivatives, so staked ETH, and actually stake them and actually put them up to borrow against them, borrow and lend them, 𝗲𝗓𝗂𝗧. Then you also have yield strategy sites that allow you to earn yields on these derivatives. And then you also have liquid staking stablecoins. So lots of different things that you can actually do. And this is the entire all-encompassing LSDFi ecosystem. And all of these protocols are going to accrue value in a different way. Liquid staking derivatives accrue through the fees of stakers. Yield strategies accrue through the fees of people actually depositing their staked ETH and, interest-bearing ETH into a strategy vault. Money markets, obviously, they take a fee on people borrowing and lending assets. So all of them accrue value from this sector, but all of them do it in very different ways. So here is your overview of some of the LSDFi protocols, specifically the ones that are more focused on the yield strategies and the indexes. We're not talking about the DeFi liquid staking providers now. So you know what the staking providers do. I've talked about Lido, Rocket Pool, and Frax a lot in the past. Now let's focus on some of these actual DeFi protocols which leverage the issuance that Lido, Rocket Pool, and Frax actually offer for their staked ETH tokens. So you've got Lybra, which allows users to deposit ETH, staked ETH, and mint an interest-bearing stablecoin against it. This is a really interesting one, and this is actually on my list of tokens I'm super interested in this space. You've got Instadapp, which allows users to deposit ETH/staked ETH into desired vaults that executes DeFi strategies and earns yield for you. So it's a way to actually activate your staked ETH because, if you stake ETH, you might earn 5% on it. You put it into an app like Instadapp, you'll be able to earn a few extra percentage via executing a strategy that is appealing to people that want the ability to earn money on their ETH, so it's not just sitting in their wallet. You've got Pendle, which is a yield trading protocol, enabling users to purchase assets at a discount or gain leverage yield exposure. The growth of this has been huge over the past few months, not only price but also community-wise. It's been impressive to watch. Raft, which allows users to deposit staked ETH to generate R and interest a decentralized USD stablecoin. So similar to Lybra, this is actually allowing people to use their ETH to make a stablecoin. Now, why would you want a stablecoin from your staked ETH? Well, I mean, that just opens up the possibility for you to do a whole lot. You can basically invest it in other assets, which is basically a leverage play against your staked ETH, or you can use that to go into other protocols and earn yield on that, etc. So the possibilities open up when you have a stablecoin, because you know it's not going to be fluctuating in value like your staked ETH, assuming, it doesn't depeg, and when you have a stablecoin that's not fluctuating in value, well, that opens up the door to be able to execute strategies which aren't reliant on underlying token price, which is interesting. unshETH or unshETH is a diversified liquid staking ETH basket that earns staking ETH yield and swap fees, all wrapped into a single ERC20 token, and you've got Asymmetrix as well. We're going to talk more about that one in a second. So these are some of the interesting ones. Honestly, I know Binance has made this list, but this is a pretty good list. Like, if you just wanted a general exposure, a general way to start learning about and investing in, if you're interested in doing that kind of thing into the LSD narrative, then this would be a good place to start looking into these protocols, working out which ones are your favorites. I mean, it's very hard to pick individual winners in this space because they all do such different things. So in my opinion, and this is just my strategy, your strategy might be different, but in my opinion, I like to almost treat my LSD plays as, a basket. I own a few of different assets in the space. I've been, accumulating them slowly on pullbacks, kind of creating a little LSD portfolio because it's a narrative I believe in long term, but I don't necessarily know how it's going to evolve. And because of that, I just want to capture general exposure through a basket. And obviously, you can kind of tweak the weightings there based on what you're bullish on. I'm kind of treating it like an index at the end of the day, because we know how fast it's been growing and we also know the potential. Now, if you just want to look at the potential, I'm not shilling LSDs here, I'm just looking at the difference between Ethereum versus other chains. I mean, it's kind of crazy. 16% Ethereum staked ratio compared to the top 20 POS, so proof of stake chain average, which is 58.1. You have a huge 42% discrepancy between Ethereum and the top 20 here, and I do think over time this stabilizes. I made a big call on a show a few weeks ago where I said, look, I think Ethereum's going to hit a 40 to 50% staking ratio over the next few years, and I still believe this to be the case. So if that happens, I mean, what are the beneficiaries? Well, let's just think logically. Ethereum, that's going to be the beneficiary because there'll be less ETH circulating, and that is obviously good for the supply dynamic of the price. And when price rises, that's good for the demand dynamic of the price. So it's obviously good for ETH. I'm very bullish on ETH long term, but if you look at the main beneficiaries, people aren't just going to stake ETH in validators because not everyone has 32 ETH. Most people don't have 32 ETH. So the majority of that growth, let's say this goes up another 20, 30%, is going to go into LSDs. And with new capital flowing in, we got to look at some of the major beneficiaries. Now, obviously, you've got 𝗕𝗄𝗄𝗧, Ladder, Frax, your LSD protocols, but I think LSDFi, so the ecosystem around it, which facilitates all these different things, staking, yield-bearing strategies, money markets, etc., all that stuff, your DEXs, that stuff surrounding, the infrastructure surrounding it, I think, will be a beneficiary because you best believe if people are going to stake ETH, they're going to do it, at least a significant portion are going to take their ETH and put it into DeFi protocols and try and activate that ETH. So now let's look at some of the protocols in this sector. We've gone through a few, but there was a good list actually made by Blockmates, which had some pretty small LSD upcoming protocols, which looked really cool that I want to share with you and kind of help you build your list of LSDFi protocols to watch. And I also have a strategy after that to show you how to spot LSDFi protocols early. Because DeFi Llama has a really good tool that allows you to do that. So I'm going to get into those two things in a second. Before we get into that, if you do want to trade on a DEX, I want to remind you that Gains Network is a great place to do so. I've been trading on here for many, many months. They're now an official show partner, which has been amazing. And they have a bunch of pairs that you can choose from here. Obviously, Bitcoin, ETH, but most of the major alts as well as Forex, commodities. I think they've got gold and silver on here as well, as you can see. So if you want to trade anything on a perp DEX, obviously keep custody of your own assets and do it in a pretty cheap and efficient manner on Arbitrum or Polygon. Link in the description to Gains Network. The other thing I want to note is we do have the Cancun upgrades, the EIP 40844 upgrade coming towards the end of the year. That is going to reduce fees on layer 2s, which is going to mean trading on dApp like Gains is going to become even cheaper over time. It's already fairly cheap, but it's going to become even cheaper. So I think DEXs are going to be a beneficiary of that. We're going to talk about that in a future video, of course, but yeah, just a little bit of information for you guys there. So yeah, link to G-Trade in the description if you do want to find a new place to trade, especially if you're interested in trading on a DEX. All right, let's get on with the rest of the video. So we've kind of laid the land here in terms of your liquid staking derivatives, also some of the LSDFi protocols underneath that. Now I want to go through Blockmate's article article which lists some of the emerging LSDFi projects to watch. Now, some of these will overlap with the ones that were listed in the Binance report, but there were also some new ones which I found really interesting. Now, I just want to say this video is not financial advice. I'm not saying you should buy or sell any of these. You should make your own decisions based on investing. This video is for entertainment purposes only. This is purely just a list for your information, and you may want to choose to invest or not choose to invest based on your specific individual investment strategy. Now, some of these I'm not too well versed on. I haven't done a whole lot of research. Some of them, like Lybra, I know a lot more about, but I still want to present them to you because I respect blockmates and what they have been doing. And I think this was a fantastic report, a really, really well-written report, which we're going to skim through now. So Gravita is an innovative LSDFi project that offers users the ability to borrow interest-free loans by utilizing their LSD tokens. The protocol offers loans in GRAI. The protocol takes inspiration from Liquidity's economic model. You can scroll through and see here that Gravita enables the borrowing of GRAI, a stable asset with a hard floor and a cap ceiling against any of the supported LSD deposits. At the moment, multiple assets are supported by the protocol. It's non-custodial, programmatic, and transparent. So this was an interesting one, but one impressive statistic that I noticed was the fact that just within a few days of launching, they hit over 14 million in TVL. So that is pretty big growth in a short amount of time. So I'm going to be watching this one on DeFi Llama to see if it can keep growing. If it keeps growing, that could be an indicator for us that people are starting to adopt the platform. The next one on their list is Asymmetry, which zooms in on the LSDFi market right where it needs the most attention: stake centralization. The protocol offers avenues to help distribute and diversify staking across multiple protocols through index products which are composed of different weights/proportions of LSD tokens. So it supports staked ETH, rETH, so Rocket Pool. It supports Lido, it supports Frax. So you guys kind of know how these work now. These stack on to your derivatives protocols. So for example, if you deposited ETH in Lido, you get your staked ETH. You could take your staked ETH and you could put it into a dApp like Asymmetry, for example, which enables you to generate yields. Now the next one, unshETH, this is one that was also in the Binance list. This one is another gem, that's what they call it, in the LSDFi ecosystem that aims to decentralize ETH liquid staking by incentivizing competition amongst the protocols and promoting validated decentralization. It's a diversified liquid staked ETH basket, so I think it's an index similar to the one we talked about before, Asymmetry, that earns ETH staking yield as well as swap fees all in one token, unshETH. Why unshETH? It's omni-chain, so it can be freely transferred across multiple chains. BNB, Arbitrum Optimism, and zk-Sync boasts one of the biggest TVL in the liquid staking industry, which is obviously a good sign as well that people are using the protocol. And yeah, it was also on Binance's list as well, so that's definitely one to look into. Another one is Flashstake. Now, technically, this isn't a sole LSD protocol, but I do think it's pretty innovative. And basically what it does is it offers instant upfront yield on your staked ETH. So that's pretty crazy. You can put your staked ETH into Flashstake and actually earn a 9.3% instant APR. So what this means is you lock it up. So you can lock it up for 88 days, for example, receive your APR up front. So your rewards up front, and then you get your ETH back at the end of the period. Pretty crazy. Basically what it does is it locks the principal for the duration that you select. Naturally, they have to claim 100% on the principal they deposit and can get it back after the set duration. It has a Flashstake protocol, a time vault strategy, and a time-based derivative strategy. So you probably think this is too good to be true. Money up front, how does this work? Well, this is how it actually works to offer instant yields. The protocol employs multiple iterations of pools to offer instant yields. These are yield pools, liquidity pools, and boost pools. The yield pool collects all the yield that's being generated from the source, such as the protocol, then TBDs are burnt to get yield out of the pools. The amount of yield that users withdraw from the pool is proportional to the amount of TBDs that they hold. For instance, if you hold 10% of the TBDs from the said vault, you can withdraw 10% of the yield from the pool. The liquidity pool is sold the TBD tokens when users mint TBDs from Flashstake. In this pool, LPs provide the upfront yield, and in return, they earn trading and liquidity mining fees. TBDs are time-based derivatives, in case you don't know what that acronym means, and you can see in front of you how Flashstake actually works. Super interesting. So it's not a free lunch. Obviously, there is some risk, but I thought this is a really interesting one, and clearly it appeals to a lot of people. So from a Flashstake perspective, that's a benefit because you're going to accrue more TVL. if you have a good offering compared to your competitors. Lybra Finance, this is the one I mentioned before. This is the one I know most about. Basically, pretty much one of the biggest ones in the ecosystem that enables you to stake your staked ETH and get a stablecoin, mint a stablecoin back in exchange. So Lybra Finance allows users to mint a stablecoin, EUSD, utilizing your liquid stake assets such as ETH, offers stable interest to users, which generates from the underlying LSD token. So you can earn interest on your stablecoin, which is very, very cool. And it has mechanisms to ensure the pegs maintain at $1, basically 150% over collateralized to make sure a Luna 2.0 doesn't happen. Well, dare I say it. So a couple more, I won't bore you. Parallax Finance, another one to look into. Asymmetrix is another one as well at the very end. I thought this was a fantastic article. So go Google it, Emerging LSDFi Projects to Watch. It was a fantastic list, and also the Binance report was great as well. Make sure you stick around until the end of the video because I will be showing you a quick tip to find LSD protocols early, which I thought was really cool on DeFi Llama. So that is basically my rundown of LSDs. I hope you guys have learned something from this and now can start looking more into this sector if you're bullish on it like I am. If not, I think it's something to research anyway if you're interested in DeFi, because look, it's pretty dry right now in terms of narratives, and I can only really think of a couple off the top of my head that could potentially exhibit strength into Q3 and Q4, and that is 1, LSDFi, and 2, the layer 2 narrative ahead of EIP 4844. Those are kind of the two standard DeFi narratives for me right now. Let me know in the description if I've missed any, but those are kind of the two I'm mainly focusing on now. If you want to trade any of the assets that I spoke about today or buy them spot, you can use OKX. Not all of these tokens are going to be listed there, so some of the smaller ones are only going to be available on DEXs. Of course, you know, your big LSD protocols like your Lido, your Rocket Pool, etc., they're going to be on OKX and Ethereum, but some of these smaller ones won't be, and you'll need to use a DEX for that, of course. But yeah, if you want to trade on a centralized exchange, I recommend using OKX, using the link in the description below, because you can get up to $10,000 in crypto if you sign up for a new account. You don't need to deposit anything, you just sign up, and you can win $10,000 in a mystery box. Now, when you open the mystery box, you don't know how much you're going to win. You could win nothing, you could win 10,000, I mean, you could win $5, $10, $100, you don't really know. You could win a Bitcoin reward, you don't know, but anyway, it could be a bit of fun for those that want to try their luck and potentially open a mystery box. Use the link in the description below if you want access to that mystery box. And now let's talk about my tip for finding LSD protocols on DeFi Llama. Now, I can't take credit for this. Patrick actually came up with this strategy, but it's really, really cool because basically there's a problem at the moment. To find LSDFi protocols is really difficult because basically there's not many aggregators online that have the data for you in one place, and even DeFi Llama makes it complicated to view which LSDFi protocols are receiving staked Ethereum products. Why is this the case? Well, because DeFi Llama and other TVL trackers track total TVL. So this could be inflows from other coins, stable coins. There's no way to differentiate whether it's staked Ethereum or not. There is one method that you can use that I found through Patrick's tweet to actually differentiate, and this takes, a little bit of intuition. But what you do is you go into DeFi Llama, you scroll down to token usage, click on this tab, and actually search up Lido staked Ether. Now you can do this for, Frax ETH or Rocket Pool ETH, but since Lido is the biggest one, I think it's going to give us the most accurate representation. So now you've searched staked ETH, you're going to get the amount of staked ETH usage in protocols. Now, how do you know which ones are going in for staking? You don't quite know, but you can use a little bit of common sense here and pair the logic with the list we saw before. So I've given you a list on Binance and the Blockmates list as well for some of the biggest projects in this space. Actually go through and look at some of the major ones, for example, Lybra Finance, and once you notice there's an LSD protocol here, you can click on it and you can actually look at its growth. So you can see Lybra has increased to almost 200 million in TVL over time, showing good growth, but it started to stall out in recent times. If we scroll down and look at some of the other protocols, for example, Pendle, we can also monitor their growth. So this gives you, and look at this growth, crazy by the way, just basically been up in a straight line over the past month or so. So that's been pretty cool. But yeah, you can basically go onto the dashboard there, search in Lido staked Ether, and you will now get the protocols just where staked ETH is going into, and you can go through, use a bit of natural filtering to filter LSD protocols from that list and track their growth. So that's quite cool because there's not really a better way to actually find TVL statistics for staked Ethereum. So this is a good way to do it. So I thought that was a good bonus tip for the end of the video, and also a bonus for anyone that wants to potentially win $1,000 through a giveaway. we have partnered with CoinWeb to give away $1,000. Now, they're launching a pretty cool new wallet with lots of features. Actually, one of the features you can do on it is create your own tokens and send it multi-chain to friends, family, list it on a DEX. It's pretty damn cool. CoinWeb's actually an interoperable protocol to facilitate bridging across multiple ecosystems and chains. So they're basically a layer 2, but instead of being an L2 sole chain, they're actually an interoperability infrastructure layer, which I think is really, really cool. And one of the ways you can access this tech is through their upcoming wallet. So that wallet is coming soon, and we are doing a $1,000 giveaway in partnership with CoinWeb using the link in the description here. So if you use that link and follow the 3 steps, it's very simple. Just follow them on Twitter. Also join their Telegram and complete the quests in their quest board. If you do all these 3 things, you can join the exclusive club and not only get to use their wallet first before the public, but also potentially win a giveaway. So for the people that are interested, link in the description to that. I hope you enjoyed this video and learned about the liquid staking derivatives market on Ethereum. It's a very cool market. It's very adaptive. It's growing very quickly. I gave you an overview today. In future videos, we'll go through some specific deep dives on individual projects in this niche, but I wanted to present this narrative to you today in case you haven't heard it before, and give you my thesis behind why I believe in it. I will see you in the next video, and until then, I hope you have a lovely day. See you later. Peace.